Nilesh Shah is with us right now. Nilesh bhai, good morning. Good to have you with us here. Shireen was outlining, right? In many of these states, it's much closer. UP especially. I don't think anyone really put the numbers as they're coming in. Almost 50-50. These are trends, and we'll have to wait for the final tally, etc. But what does it mean for the markets, Nilesh?
Well, Prashant, my sense is markets honestly will wait for the final outcome. I mean, I think, of course, the headline numbers may not necessarily be, scary, or it may not honestly mean any change because still the NDA has essentially a majority. But yes, I think the internals, which is like what you said, the tally in Uttar Pradesh, these are some of the things which the market will begin to notice maybe after a day or two. I think for now, I think what the market will just be looking at will be is what are the headline numbers and who's in a stronger position to form the government. What it looks like from the headline tally, that it is going to essentially be the NDA and it's going to be a third term there, assuming these numbers turn out to be true by the end of the day.
Well, point taken, Nilesh. This is quite a surprise for the market and for all poll watchers. But the important point is these are leads. Let's not jump the gun. Leads do turn, and it could be phase-wise counting. So even the market shouldn't be jumping the gun at this juncture.
Latha, CNN is saying that round one is much slower than anticipated. The UP round one is not yet completed. So,
the counting,
so to the point that you're making, that these are trends which are coming in.
Exactly.
It seems, of course, and we had a political expert earlier who was saying that this should largely be similar. I mean, the final numbers, but these are trends.
No, I heard Bagri say that trends don't change, but we have seen in our own time.
That's what I asked him.
I'm a veteran of enough elections, and things have turned midway. So I think we shouldn't jump the gun. And those, of course, people who have money in the markets will have to think differently.
Yeah.
But clearly, we have to just wait before we pronounce anything. But, Nilesh, what went through my mind is that if the BJP is dependent on alliance partners, and if this is what it is, by close of counting, then does the BJP become a more welfareist party? At the moment, their welfareism has been hemmed in by fiscal deficit, which was very good for markets, for, macroeconomic resilience. But do you think welfareism can come back? And that's why consumer stocks are doing well. Anyway, your thoughts, Nilesh?
Yeah, that's the reality of politics, Latha. And that's the reality that, yes, in the past, traditionally, coalition governments or not necessarily the strongest of coalitions have essentially been, they have been more welfareist. That's the reality. And I don't think we should be surprised with that. Just that I don't think, it's going to increase quite dramatically. I mean, there's already a fair bit of welfare measures which have been going. We have said this even earlier, that even 2019, the re-election was partly due to some of the welfare policies initiated during the first term. So things like free food for 80 crore people and some of the other welfare measures are still anyway there. So I actually don't think whether there's room to further increase meaningfully, the welfareist things. Yes, there could be, some bit of tweaking here and there and all, which can look to be kind of massively more welfareist. But otherwise, I think there are anyway significant number of welfare measures out there. So I'm not too sure that will change quite dramatically. What can happen is at the state level, and as different states go for elections, there you could see maybe a fresh bout of welfareism coming in, in terms of the DBTs and things of that kind. So that can surely come in. But I think at the central government level, I'm not quite sure if there is room to kind of significantly up the welfare things.
Okay. Well, as I was saying, we must be wary of calling leads as wins. We shouldn't confuse the two. And in the past about 5-10 minutes, we have seen the NDA number. Of course, this is out of 538. Jump from about sub 300 to 308. So clearly things are turning.
Our colleague Hormuz tells us that Suresh Gopi, who is a very popular Mallu film star, not yesteryears, but over the last couple of decades, he might become BJP's first win in Kerala. So he's leading in Thrissur. by over 15,000 votes.
No, Tirusur was expected.
That's a large lead.
And Tirusur was the only one expected from the start to go. And there is also one of the constituencies outside of Thiruvananthapuram. I don't know if it was Thiruvananthapuram.
Artangal.
Artangal and Tirusur are expected. I mean, that's where
they have
very
the most
strong
chances,
BJP.
yes.
No, absolutely. And I guess for that reason, he will earn his place in the history book. So beyond all the films that he's done on a lighter note. But, you know, I think for the market, the question that we'll be putting to a lot of our experts as we go forward is that whether there needs to be a shift. A lot of portfolios, domestic portfolios, domestic institutional mutual fund portfolios have been geared towards, you know, loaded up on the PSU, loaded up on the CapEx theme, and a little sort of perhaps, you know, under-representation by FMCG. Nilesh, since I have you with me on the screen, before we go to Mangalam, let me actually put that question to you. We're seeing some of that shift, you know, knee-jerk shift obviously play out immediately today. But could this be a reality over the next coming weeks that portfolios, institutional portfolios need to tilt away from CapEx, PSU defense and back to a bit of defensives?
Yes, Surabhi, that's quite likely to happen, assuming, of course, that this tally, you know, the numbers that we are seeing on our screen in terms of tally, they hold out to be true. We really don't know that, but that's something which can surely happen. As it is, there has been a massive rally in PSU stocks, and it's quite possible that situations like this trigger some bit of profit booking, recalibration of exposures and weights to the PSU pack. So I definitely see some bit of tweaking happening out there. Whereas, you know, the vast majority of the capital goods stock, yes, again, there could be some tempering in terms of exposures, but I don't think they will be quite significantly impacted. On the other hand, there could be a bit of shift towards defensives. IT, pharma, FMCG, these essentially could also be favored sectors, especially with crude oil prices falling. And if we were talking earlier of some of the other welfare measures, obviously that's going to boost rural spending, and the FMCG sector will be a direct beneficiary of some of these factors. So I think, yes, going forward, I surely see some bit of tweaking and recalibration of exposures happening.
Okay. Okay, Nilesh, let me come back to the question I asked you about the FMCG performance. I'm going by exactly like my DNA, a bond market reporter. Yesterday, the bonds went down all the way to 6.94, the 10-year. Today, it is at 7. In fact, it was 7.01 a little while back. Clearly, the expectation being that the huge fiscal deficit crunch that was expected may not come after all. Perhaps that's what the bond market is fearing. Otherwise, there's no reason, because the US bonds actually fell overnight. So the only trigger, and crude has fallen. Everything should have pushed the bond yields even lower, but bond yields have jumped.
Yesterday, bond yields were absolutely flat, right?
694. You were looking at the older 10-year. The new 10-year went down from 6.98 to 6.94. That's the overnight close. Now it is 7.0. So, you know, 6 basis points higher. Probably that big faith that fiscal deficit will go down aggressively is getting watered down, or maybe this is just trading profit taking at this point. But just to come back to you, Nilesh, if these are the final results, you know, around 300 for the NDA and you know, the India alliance coming in with a fairly decent 215, 220. Do you think you will change your positioning in terms of stocks? Would you look at a different set of stocks, Nilesh?
Latha, yes. Obviously, the emerging political scenario definitely will call for some kind of recalibration or some tweaking in terms of allocations to different sectors. There are a set of sectors, primarily PSUs and some of the other infrastructure and capex-oriented sectors, which have witnessed quite significant price appreciation. A lot coming in because of PE re-rating or multiple rating, and the markets kind of having much higher levels of confidence and therefore assigning significantly higher valuation multiples. If this is essentially the final, if the numbers that we see on the screen now is going to be the final tally 24 hours from now, you surely seeing some softening on those PE multiples, particularly for the PSU pack. So if we see the situation actually emerge like this, there would surely be some kind of compression in the P multiples, and it's going to essentially lead investors to allocate or take some money off the table from PSUs, because obviously keep in mind they're significantly in the money right now. And obviously that capital will get allocated to some of the other sectors. In an environment like this, yes, FMCG is going to look to be the most defensive. It is going to look to be the most strongest fort out there. In addition to, of course, what we see on the political front, in addition to that, the softening of crude, the upping of rural spending, all of that augurs well for the FMCG sector. And you're going to see some bit of allocations also go into IT and pharma, because those are the sectors which are the least dependent on any government policy.
Okay. What about manufacturing and construction? Those were the other big winners in the run-up to the counting day.
That still remains a strong play. I don't see this political uncertainty impacting manufacturing or construction activity. I think that will continue unabated as long as we have a conducive interest rate environment and there are no major policy changes. I continue to believe that manufacturing will essentially continue with its outperformance. Keep in mind, for any administration, any government, that whole shift from farms to factories would require a big leg up to manufacturing. So irrespective of which the party is in power or which alliance is in power, I still think the focus on manufacturing will not go away. The China plus factor is still as strong and as structural as ever. So I still believe that manufacturing as a sector still looks extremely attractive.
Okay, all right, Nilesh. On that note, we will let you go. It's been a roller coaster morning. Thank you so much for being with us. And of course, we'll be touching base with you, fairly frequently as we make sense of a lot of these trends when they finally, come down to the overall tally.